What is up, guys? My name is Gustavo with Gustavo's Finances, and welcome back to my channel. Today I'm going to be talking about the dilution Aurora Cannabis continues to put on their shareholders, what it means for the company, why they're doing it, and the overall impact it's putting on the shareholders. Now, before I do continue, I do want to mention that I'm going to be putting some of these terms down in the description below for the sake of my viewers who want to learn and have an educational experience while I'm talking about this company. So Aurora Cannabis continues their shopping spree as they acquired a new privately held company into their portfolio. This company is called Whistler Medical Marijuana. So what is Whistler and why did Aurora Cannabis acquire this new company? Whistler is a small British-columbian-based craft grower of both organic and non-organic cannabis, expanding up to 5,000 kilograms of products each year. Whistler has other products too, such as pre-rolls and cannabis oils, and actually their pre-rolls are among the top 4 selling products in the province. And once Whistler finishes their expansion, they should be making around 15 million Canadian dollars in EBITDA, according to Aurora. Aurora has also noted that Whistler is a profitable cannabis company with positive cash flow since 2015, and that they're building a European facility that is EU GMP certified, so Aurora will actually be able to supply cannabis in the European markets, and this is actually great global expansion for Aurora. Although this is a great acquisition for Aurora Cannabis, it costed them 175 million Canadian dollars in an all-stock deal, adding 21 million shares, diluting existing shareholders. Now, diluting shareholders has a negative impact in Aurora shareholder value because it reduces the percentage of ownership a shareholder has, thus lessening the value and ownership of an Aurora shareholder. Now, let's put this into perspective. If you owned a 10% stake in Aurora Cannabis before it acquired a company called CanniMed, then you'd now have around a 3.5% of ownership into the company because of dilution. Now, this isn't the only time Aurora Cannabis has diluted their shareholders. It seems as if this is their strategic way of acquiring their assets. For example, MedRelief, they acquired for 370 million shares. CanniMed, they acquired for 72 million shares and $140 million in cash. They acquired ICC Labs for 36 million shares. And lastly, they're acquiring Whistler for 21 million shares. Overall, this strategy does save cash in hand, but it does impact the share price and the shareholders. And as a shareholder myself of Aurora Cannabis, it does kind of suck, but Amazon did do this in the past when they were first starting up, and you can see how well Amazon has done so far. So we're just gonna have to see how this strategy pays out in the future for Aurora Cannabis. Also, Aurora Cannabis just announced a $250 million debt offering, a private placement of senior notes due in 2024. Now, Aurora stated that it would be using this offering in order to expand its operations in Canada and internationally as well. And many high growth companies need to do this in order to expand because of the capital they need to grow. Now, this does mean a lot more dilution for existing shareholders because of all the notes that they're adding that could possibly later be turned into shares. Now, that is all I have for today, guys. And to conclude this video, what are y'all's thoughts on Aurora Cannabis? Do you think their dilution strategy will pay off? Do y'all own any Aurora, and where do you think this company is headed in the future? And as always, you guys have a wonderful day. If you liked the video, give me a thumbs up and subscribe if you'd like to see more. Thank you.